Good day, traders. Stacey Burke from Stacey Burke Trading. Just going to be reviewing the British pound yen cross from last Thursday, May the 12th, I believe it was. 15, 14. Yes, the 12th. Just looking at showing you a really clean textbook pin bar trade on the London Forex Open. Just showing a couple of really simple patterns. But let's go back to the daily chart. Looking at the big bull bar, that was Monday, Tuesday, so we had a breakout market long. Then we had a bear bar come in on Wednesday. On Thursday's session, as the market opened up, it took out the low of Wednesday. Now again, remember the concept of trap traders. So we have this situation where bears have shorted the market, and we'll just use a different indicator here for that. So on Wednesday morning, bears shorted the market. Now they've shorted into a strong uptrend breakout from Monday, Tuesday's pattern. So again, one of the things we look for is trap traders. Now if we go to our hourly chart and we go back to the initial premise from the London Open session, where between 2 a.m. and 5 a.m. New York we look for potentially a high or low buying or selling area to be established for the duration of that session into the US Open. Often 80% of the time we will find one of those first three candles will be the high or the low. But one thing we do know is that when the market took out the low from Wednesday and started to trade back up into the London Open, so again, just rehashing, the pink is Asia, the yellow is London, and the green yellow is the the Europe US Open crossover, and then the green being the US market time. So these first three candles are 2 a.m., 3 a.m., 4 a.m. candles. We had a pin bar established, so the market has taken out the low, auctioned back up above the 20 period moving average or 50% area from Asia, whatever you want to call it. But we had a pin bar established. Now the other component of this is that there was a catalyst that was going to precede that breakout, and that was an announcement that occurred at 4:30 a.m. New York time. But that aside, pin bar traders would have been possibly either taken in long on the break of the high of the pin bar, or perhaps somewhere in that range between 50% and above. Now the next obvious place to go is where those short traders from Wednesday would have their stops, which of course was above the previous day's high. And as we saw, the market broke out and auctioned up strongly up towards that high. And if we looked at that just in a quarters and halves sense, that's 50% of the range. So again, just looking at some simple patterns, if we take that quarter from the previous day, we see that the market took out the low, immediately rejected that, auctioned back up to the 50% area. Pin bar traders were taken in long at the 50% level. The next obvious target was the previous day's high. We saw a quarter extension, which again we know is quarter extension to 3/8 is where the majority of marginal new highs and new lows fail. And we saw that traders were looking at somewhere in the region of 70 to 80 pips of tradable profit. And that particular candle was about 50 pips in length in terms of risk. So it was definitely a good risk-reward trade, lots of momentum on those candles going into the London Open. A really simple setup for traders, not only as a pin bar trade, but off the London Open, knowing that we had momentum and that we would possibly see a measured move. Again, for more information on this type of trading with measured moves, pin bars, candlesticks, you can read Al Brooks' work, Trading Price Action Bar by Bar. But there's lots of good information. But again, that London breakout pattern, very strong momentum off the open, and the pin bar traders were able to capture a nice move. Hopefully you got some value out of that today, traders. It's not a trade that shows up all the time, but it is a really clean setup. Look for some really simple trades in that first 2 to 3 hours of London, and often after the fourth hour, which is the 50% of trading time for that 24-hour cycle, which we've talked about in some of the other videos. But keep it simple, stay disciplined, keep your money management rules tight, and may the markets go with you. Hopefully you got some value out of today's video, traders. If you like it, please share it on Facebook, and if you haven't done so, go to my homepage and get my 7-step daily routine for high performance traders. Keep it simple, and may the markets go with you. Thanks, traders. Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.